Robinhood stock is still soaring, and this week added even more fuel to the fire. After gaining around 6.5% on Monday, Hood continues its remarkable run in 2025, building on strong earnings, bold innovation in the crypto and blockchain space, and growing investor confidence. While the aftermarket was relatively flat, the regular session move is yet another sign that investors aren't just reacting to headlines, they're positioning for the long-term evolution of this company. But is this momentum truly sustainable? Or are we approaching a level where expectations are running ahead of execution? Let's take a look at what's going on with Robinhood stock, what's driving this latest leg higher, and what investors need to watch next. First, the Monday move. Hood rose about 6.5% to close just above $113. That puts the stock near its all-time highs, and up roughly 190% year-to-date. It's been one of the strongest performers in Fintech and among the top gainers across major US stocks in 2025. Now here's the interesting part. There wasn't a major headline on Monday that drove the rally. No new product launches. No regulatory approvals. No press conferences or partnerships. Instead, this move appears to be part of a broader continuation of the bullish sentiment that's been building since Robinhood's Blowout Q2 earnings report, and it's being reinforced by analyst confidence and a growing awareness of the company's evolving business model. Let's break this down. First, the analyst angle. Piper Sandler recently raised their price target for Robinhood from $70 to $110, while maintaining an overweight rating. That comes on the heels of upgrades from other firms like JMP Securities and Morgan Stanley, who have also revised their outlooks upward. Analysts are pointing to Robinhood's multidimensional growth across crypto, equities, and global expansion. For a stock that was once dismissed as a mere flash in the pan, this institutional validation is significant. And frankly, it's not without reason. Robinhood's Q2 earnings were more than just a beat. They were a statement. The company posted earnings per share of 42 cents, crushing expectations. Revenue came in at $989 million, up 45% from the year prior. Transaction-based revenue, meaning actual trading activity, hit $539 million. Of that, crypto trading accounted for $160 million, nearly doubling from last year. And options trading, another core piece of Robinhood's business, brought in $256 million. They also added over a million new funded accounts, bringing their total to 26.5 million, and increased platform assets to $279 billion. The average revenue per user, a key metric for platforms like this, jumped to $151, showing that users are more active and engaged than ever. Now, beyond earnings, Robinhood is clearly working to redefine its role in the market. One of the most exciting developments has been the launch of tokenized US stocks and ETFs for European customers. This allows international users to buy blockchain-based representations of US equities, over 200 of them, including companies like Apple, Tesla, and Nvidia. The move opens up the possibility of 24/7 equity trading, especially once Robinhood finishes developing its own proprietary blockchain. This isn't just a gimmick. Tokenization offers fractional ownership, instant settlement, and borderless trading. And if Robinhood can truly simplify the user experience, it could attract millions of new users globally who want access to US markets but don't want the friction of traditional brokerages. They're also testing the waters with tokenized private company exposure. Firms like OpenAI and SpaceX have been mentioned, though this part of the platform has sparked some concern among regulators. These offerings don't represent direct equity, but they allow users to gain synthetic exposure to the performance of private companies, something previously reserved for venture capital and institutional investors. And while that's exciting, it does come with risk. European regulators, particularly the Bank of Lithuania, are investigating whether these products are compliant with existing securities laws. There's a real chance Robinhood could face scrutiny, or even temporary restrictions, on these tokens. The company will need to tread carefully to maintain trust and avoid overstepping boundaries. On the crypto front, Robinhood continues to push forward. The acquisition of Bitstamp, a respected global crypto exchange, has been finalized. This gives Robinhood a solid infrastructure for expansion into new regions like Asia and strengthens its crypto offering in Europe. They've also rolled out staking for Ethereum and Solana, along with perpetual futures trading for European users. In short, Robinhood is no longer just a stock trading app. It's becoming a financial platform that straddles fintech and crypto, with features designed for both retail traders and more experienced investors. And all of this is happening alongside a favorable legislative backdrop. The US House recently passed the Clarity Act and Genius Act, two bills that create a framework for stablecoin regulation and digital asset oversight. While they haven't passed the Senate yet, they're a signal that US lawmakers are finally taking crypto seriously, and not just as a risk, but as a part of the future financial system. This kind of environment creates tailwinds for Robinhood, which is well positioned to take advantage of both regulatory clarity and growing user demand for crypto access. So, where do we go from here? The near-term question is, can Robinhood keep the momentum going without a constant stream of flashy headlines? On Monday, the stock moved up strongly on the back of ongoing enthusiasm and analyst support, not because of a brand new development. That's a sign of strong market sentiment. But sentiment can fade fast if it's not backed by continued execution. Here are the key things investors should watch. The rollout of Robinhood's proprietary blockchain. This is the infrastructure that will enable 24/7 tokenized equity trading. If it's smooth, scalable, and secure, it could be a major advantage. But if there are delays or technical issues, the market may lose patience. Adoption rates in Europe. Tokenized stock trading is live now, but are people using it? High engagement could show product-market fit. Low uptake could signal confusion or lack of interest. Crypto revenue consistency. Q2 showed massive year-over-year growth in crypto trading, but that segment is historically volatile. Robinhood needs to show that it can deliver steady results, even if crypto prices fluctuate. Regulatory updates in both the US and Europe. A green light from regulators would be bullish. Any enforcement action or forced product changes could put pressure on the stock. And finally, index inclusion. Hood still has a shot at being added to the S&P 500. If that happens, it could bring billions in passive inflows and further validate the company's transformation. So, to wrap it all up, yes, Robinhood stock is still flying high. But this next phase is all about follow-through. The company has the momentum, the innovation, and the earnings to support a higher valuation. But it's going to need to execute consistently, manage regulatory pressure, and turn its bold ideas into lasting user growth. If it can do that, this rally might just be the beginning of something much bigger. Thanks for tuning in. If you found this update helpful, don't forget to like the video, subscribe to the channel, and leave a comment letting me know, do you think Robinhood still has room to run, or are we nearing the top?